Hi there, Greg Lewis, Metastock Software. Hey, you're about to watch a recording of the April 2017 Online Trader Summit presented by Metastock. This quarterly event, put together by our own Jeff Gibby, highlights some of the industry's best traders, and I know you're really going to enjoy it. Hey, if you haven't tried Metastock yet and would like to have an extended 3-for-1 trial, visit metastock.com/traders-summit 3-for-1, or just click one of the things provided and get your free trial. Thank you, and I hope you enjoy the presentation.
Our next presenter is Todd Gordon. Todd's a great guy. He is on CNBC all the time. We have this is, I believe, his second presentation in the Metastock room. Last time he did a great job. Has an interesting take on Fibonacci. Let's go ahead and not cut into his time. Let's get him on here. Todd.
Yes, sir, Jack.
How are you?
I'm good. How you doing?
Good, good. What do you want to say?
Big round of applause for Jeff and Metastock. They've been working hard on this event, so thank you very much.
Yeah, thanks for coming, and thanks everybody for attending. It's amazing to me how successful this thing's been. So I'll be frank about it. What do you have to? Let's go ahead and turn the presentation over for you.
What do you have to say? What do you have to say for yourself?
What do you have to say for yourself?
Thanks again. Everything good?
I can see your face.
Hi, everybody. All right, so dive in.
Go for it. I'm gonna get out of the way.
Perfect. Thanks, Jeff. And hey, everybody. Happy Saturday. Happy spring, summer almost. It's nice out there. Just got back, took my kids to Stalker. My mom was getting her hair done, so I was like, super dad, went to Home Depot. I've had a very busy morning. Anyway, we'll have some fun. We'll talk about some fib, talk about some live trading. You guys are in for the long haul. A lot of good presentations and traders that you're looking at here today. So, my little bit of advice is find something that works for you. It could be, all of one guy or girl's methodology or bits and pieces of each one, but find something that works for you, that works with the way that you think, because when you're in the heat of battle here in trading, you've got to have a lot of confidence in your methodology. So it's hard to get kind of bombarded with everyone's methodology. So just pick and choose what works for you. And dedicate yourself to it. That's just my only kind of advice for these big multi-speaker events with a lot of powerful traders. So let's hit it. We're going to be talking about fib a little bit. Let me get the questions out. We've got a really nice audience here, big audience. I'm sure Jeff told you this, but I wouldn't log out because I don't think you're going to get back in. I'm sure he told you that. We'll roll, so I'll make up some time. No problem. I shouldn't take the full hour, so we're in good shape. But anyways, I really want to get questions up. Let me make sure I can see those. View questions. Okay. And all right, perfect. I'm good. And they're going to be at the very bottom. Okay, guys. How many? This is going to be an odd scroll. How many of you guys are using fib? Have been exposed to fib? Maybe you use it a lot. Maybe you know enough to be dangerous. Maybe you think it's voodoo. You give me your honest opinion. I'll kind of tailor the presentation as we're going, just to kind of get started and exposed to fib. And there's a lot of people in this room, so trying fib very little. Todd fib graduate. Sam awesome. Only in currency. Remember your site. Hey Stan, what's up? Okay, very little. Okay, cool. All right. So generally about 61.8% of the room I'm finding uses fib, and 38.2% of the room doesn't. Horrible joke. Let's move on. All right, and let me go to the very top. Perfect. That's good. Somebody just said I was using fib for a while and I was traumatized. Okay, I'll skip that. Public service announcement, stand-up desks. I go in this little story about like our public health announcement. If you haven't gotten a stand-up desk, I'm at mine now. I highly recommend it. It's awesome. I'll skip the fluff and let's keep moving. So guys, warning, and there's some pretty good stuff in here. You've got to be aware of the risks and willing to accept them to trade. Don't trade with money you can't afford to lose. That's really good advice. Don't just skip over that. The way, guys, I'm a trader. It's all I've ever done. Right out. In fact, I traded during college. I traded. My first job out of school was at a proprietary trading firm. I'm 38 now, so I guess I've been in the trading markets for wow, I guess 17 years. I've been trading for 18 or 19. So, I've still got a ways to go. But I guess what I'm saying is, I know what you're going through. If you're new to trading, and you haven't really gotten your feet underneath, or if you're a little bit more experienced, then you call yourself proficient in trading, and you certainly remember what those days are like. The biggest thing I can say is take accountability. Know the money you have at risk, not only in your trading account, but in each individual trade. And I think what I'll try to do in this presentation is show you that you have to accept the risk in each trade. And the way you can accept the risk in each trade is by having a methodology that will allow you to define your risk. And I think that's a key part of trading. So every single trade, you got to look yourself in the mirror and say, do I accept the risk in this trade? If this thing goes completely to hell and I get stopped out, is that okay? Can I look at myself in the morning? And the answer is yes, perfect. You are free to go and see that trade to completion. If not, that's when bad things start happening. So this is a risky game. You're going to get slapped around. The way I look at trading is it's a boxing match. You never go for the knockout. You're going to wind up in your butt a few times. You got to get back up and then win the decision at the end of 12 rounds. Okay? I'm not a get-rich-quick guy. I've got so much respect for this business and this industry and clients and customers that work with me. I ask the same for you. Okay? All right, guys. So back to and again, guys, there's so many people in this room. I usually go back and forth with people, but there's so many comments coming through that I'm going to be sparing, especially because we got to be sensitive to time as well. So don't think I am not. I'm ignoring you. So those of you who've been through this or are going through this, I first started trading when I was 20. Actually, I started trading when I was 19. My first job was 22 in San Diego out of college. And during college, I was reading Alexander Elder's book, Trading for a Living, if you remember that one. I usually have it laying around. It's over there on my bookshelf. But what was happening was I was going through each chapter, reading about an indicator after indicator after indicator, and pretty soon my charts got so jammed up with indicators, I couldn't even see price action. It was getting to be so small. So I arrived on the first day of my new job out of college as a trader, and I had like 9 indicators in my charts, and the guys were like, what are you doing? So they kind of forced me to get rid of some of the indicators because I was so paralyzed by all the signals that are being fired off, I had to kind of devolve. So it's kind of what I call indicator. It's not evolution, it's almost de-evolution. So I was suffering by paralysis by analysis. So I had to start to eliminate that which didn't work. So now you fast forward 15, 18 years, and these are what my charts look like now. You're going to see some letters on here and some horizontal lines. And these horizontal lines are these Fibonacci ratios. Now there's a lot of education out there. Fibonacci is exploding. There's a lot of friends of mine who are very prominent traders and educators who are bringing Fibonacci to the mainstream, and it's really exploding in popularity, which is great. So I take a slightly different approach. I like to make it so you understand how to draw these lines and come up with actionable zones that you can start to trade ahead of time. So I guess what I'm saying is in my decade and a half of trading, I've devolved and started to use less and less and less and start to use the minimum effective dose, which is just enough to be effective, but anything more is dangerous. Okay, so if you still don't believe that indicators, you really can kind of leave them behind, let's kind of take a look at this chart. So this is a setup that I can teach you, no problem, in like a weekend. Okay, so the market comes down, this bar or candle, doesn't matter, you can use candles or bars, doesn't matter, test this zone of fib support. And this is something that I'll teach you, but this is called an FSZ, fib support zone, right? So we test the zone, bar breaks out above the test of the zone, that is your entry, standard textbook entry 104, risk is clearly defined on this trade. If you take your MACD entry, which is a standard moving average convergence divergence, you're going to be triggered in up here to 108. Okay, so if you compare 108 entry using the standard 12-26-9 settings on your moving average convergence divergence compared to your standard 104 entry, that's a huge difference right there. $4. Okay, and what you might think is like, well, you're giving up $4 of possible profit on this move higher. And the way I look at it is you're taking $4 of additional risk. Okay. It's really hard to define where your stop loss is going to be when you're trying to buy a breakout using a momentum indicator. Okay, so the whole point of the presentation that I'm going to give you today is You want to get as long as you can, as close as you can to support. And you want to get as short as you can, as close as you can to resistance. And the way you do that is by using methodology that will help you define where the turning points may be. And if you are unable to define where the turning points may be in the market, and it drops through your anticipated zone of support, no problem. You're going to have a stop loss standing by immediately below to contain any risk. So the best way you can become a better trader in the next week is to improve your entries, which will inherently decrease your average losing trade size. That's the best way to become a better trader in the shortest period of time. The other side, and I'm just like skipping the whole point of the presentation that I hope you'll take away, and I'll say this a few times. The hardest part, the hardest kind of side of the equation to become a better trader is to stick with winning trades longer, like trailing stops forever, like keep going, adding to positions, rolling up option positions up and out. That takes a longer time to perfect. Okay. All right. So, yep, I'll get rid of. Okay. Perfect. You know, and Michael, that's a good question. Algo trading dominating most trades. Is trader sentiment still relevant? You know, and that's a good point. I'm actually going to talk about that here in a little bit. So $4 profit gone, okay, which I think is $4 of increased risk. All right, and we've got to work on keeping our stops smaller and smaller and smaller. Not only can we trade with this fib stuff, okay, but we can also do longer term analysis. So I'm just going to play a video. This is about 30 seconds, and then I'll come right back to you. I'm going to turn this volume up here right now.
Todd Gordon for Schlossberg, and Tom, we're going to give you some props because 3 months ago you said that oil would fall to 26 bucks.
Oop. I just unplugged my speaker. Never mind. I'll give you the point of the story. So CNBC, when crude was at like 42 bucks, I said, we're going to go to 26 and stop. And I went on air, and basically it came back, and Brian Sullivan was like, Todd, you know, you're the guy who got it. Like, I called the low in crude oil on CNBC like 6 months ahead of time. So they brought me back, and Brian's like, Todd, you're the guy who did it. Like, wow, how'd you do it? Blah, blah, blah. The story went #1 on CNBC.com and Yahoo Finance. It was viral for finance. It was crazy. Like, I was the guy who got the low in crude, and everyone's trying to figure out where crude's going. When it was like 26 bucks, it was like people going at $1 a barrel or $5 a barrel or $10 a barrel. Just two simple little fib studies here were what it took to find and secure the low in crude. And these are the actual charts I give out to our customers. So, you know, it's something you can use for shorter term trading. You can use it in futures markets, Forex, stocks, whatever. And you can use it on longer term charts as well to help your longer term position trades. So very quickly about me, I know we're on time. I am Todd Gordon. I run tradinganalysis.com. Live in Central Jersey. I'm from way upstate New York, up in the sticks. My wife Trish and Jake and Brody, the boys, just brought them back from soccer. Long story short, our wedding reception was at Trump National, and so Trump, the president was at the wedding. The only thing that worries me is this is my best man Jeff doing what best men do, which is doing the best man speech, which he was crucifying me. Trump and Melania were in the corner just shaking their heads laughing like, oh my God. So Jeff said all the bad stuff I've done in my life, and trust me, I'm no angel. So Trump like knows all the stuff I've done and might deport me. I've been doing CNBC for about 10 years now. I actually was just on the 2017 stock draft. If you guys saw that, that was kind of fun. That was this week. I got just a couple pictures here. Where is that thing? So this was funny. It was fun. So I wound up. So this whole thing. We did this draft on the college football, and the Rutgers cheerleaders were there. Don Peebles, guy Charles Wade played for the Giants, Kevin O'Leary. So we each got 2 stocks. We selected out a list of 50, drafted into the Super Bowl, and I wound up with Tesla and Netflix. So the best % return is we're going to be good. So that was kind of fun. So I do stuff with CNBC. I trade my own accounts. I've been trading for, like I said, right out of college. I'm a real trader. Every single trade that I give out to my customers, I put in my own trading accounts. I run the research business. Hopefully I can grow it up big enough to hand it over to Jake and Brody someday. Okay, so let's talk about some myths, some facts about technicals and specifically fib. Have you ever heard this? Technicals don't work when markets are highly emotional, and technicals are self-fulfilling prophecies. Well, let's take a look at the Dow, okay, from 1923 to 1929. Okay, you guys know what happens next, right? 1929, we crash hard. okay? So where do we crash? We sell down in the Dow to this level right here. We do a double bottom right here. We break through. We actually retest as resistance and then sell off. This level wound up being one of these fib ratios that I will introduce to you right now, okay? So that is the 61% retracement. The Dow from 1923 to 1929 crashed, double bottomed on the 618 retracement, which is one of the key ratios that we look at. So again, back to this prior slide, like, okay, technicals don't work or markets are highly emotional. Well, that was the crash in 1929. The country was only 150 years old. They'd never seen anything like that. Highly emotional, yet fib nailed the bottom. And number two, technicals only workers are self-fulfilling prophecies, and specifically fib. Well, that's not true either, because fib won't be applied to the markets until the 1960s or 70s. So for some reason, the Dow crashed into the 618 retracement. Hell, that was the defining level. And there's plenty of examples like this. So does it always work? No. Does it give us an edge over the market? Absolutely. Absolutely does it give us an edge, and it helps us define low risk, high reward trades. I do think there's a certain degree of it being a self-fulfilling prophecy, and I'll introduce that to you. Okay, so it's all about anticipating the trades. And I'm big believer in this quote from Tony Robbins: anticipating is ultimate power. Losers react, leaders anticipate. So what you want to do is anticipate trades by anticipating your entries hours and days ahead of time. You can't react with indicators. Buying breakouts, that's like trading like it's 1998. That is so far gone with the algos and hedge funds and buy-side traders and deep pools and HFTs. Forget it. Trying to buy breakouts, that's gone. Spreads are so tight now, so you've got to anticipate entries, which helps you define risk really well. So you got to trade like a market maker, which is basically defining where you want to trade ahead of time rather than being a market taker, which, like a market taker, just comes here in the morning, sits down, the bell rings, and they just say, all right, buy, wherever the market's trading. Okay, it's going down, sell. And what you're doing is you're just generating a ton of commission dollars. You're chasing, reacting to the market, and you're trading on your back heels, right? You want to be in an offensive posture, on the balls of your feet, anticipating what's going to happen. And that's how you have to trade. Puts you in a position of strength. So just to underline this point one more time, here's your fib entry, right? So the fib entry here is going to get you in about 740 right here on this bar right here. I'll teach you how to do it. MACD, again, we're going to pick on MACD because everyone knows it. That's going to get you in about 750. So we think about it. What happens when the market, you're long from 750 and it comes back against you? And you didn't really think or anticipate that happening. You said, oh, we've got a moving average convergence divergence breakout. The stock's going to continue higher. You didn't think about the stock going 15 bucks against you in Amazon, and then you're like, oh God, what do I do now? At this point, you're sweating bullets, you're nervous. You probably hit the eject button at the worst possible time, only to watch the market rip higher. That sucks. If you have a strong entry and you've anticipated a good entry against your fib support with clearly defined risk, the market's going to go in your favor a little bit. It's going to come back, retest your entry, go a little bit against you, but you're cool. You're okay because you anticipated it ahead of time. You had a plan. You're not going to emotionally react out of that position, and then you'll enjoy the profits. That's what we're trying to avoid, and that's how you become a better trader in a short period of time. And in my short 17-year career in the trading markets, this is the very best that I can hand you to help you anticipate and get better entries. Okay. So 3 main objections to fib, and I know a lot of you have had exposure to it, and I was watching the questions like, okay, some people use it, some people don't. There's a lot of confusion around it, and I don't blame you at all. Okay, where do I start and stop all these fibs? Which one of these 50 ratios on the chart will reverse price? All the tools are confusing. Like, I totally agree. So, my job is to teach you and show you, take away some of the confusion, break it down in a step-by-step process, and I think I've done that. So here's the Fibonacci trading scroll on display in the Louvre in Paris. Swear to God, I've seen it. Handed down from the 14th century, old Italy. Just kidding. It is a 6-step trading process, okay? I'm going to give you a trend trading strategy right now that you can start trading Monday. It's going to be able to help you identify the trend in the market, find a likely pullback support area to establish long positions, or a likely rally back area, corrective rally to establish short positions using 2 tools of fib. We're going to accomplish that here. Okay, number one, we've got to talk about swing waves. Real simply, there's two kinds of swing waves. A swing wave is a short-term change in the market. Okay, so we have a candlestick, we have a candlestick, we have a candlestick. Let me draw some wicks on there. So there's a wick, there's a wick, there's a wick, and there's a wick. Okay, so a swing wave high, SWI, is a short-term high in the market with a lower high left and a lower high right. That's a swing wave high. The other side is if you have a swing wave low, it's going to look like that. Just a short-term swing trend change in the market. Okay, that's your swing wave low right there. I like to define them by the amount of bars that don't exceed that high or low. A minor swing is a high or low in the market that is not exceeded in at least 5 bars left, 5 bars right. That guy gets a purple dot right here. It can be a swing wave high or swing wave low. It's a short-term trend change in the market. Okay? A major swing, same thing as a major swing wave high or low. It's a low in the market that is not exceeded in at least 13 bars before and 13 bars following. Once you have that, here's 9, here's 10, here's 11, here's 12, here's 13 off the chart. Once that 14th bar opens, this dot right here will turn blue. This is a big-time lagging indicator, and you might think that's kind of weird, Todd, because you're talking about only using leading indicators, but you're going to look back at past price action to figure out the most significant swings using these purple and blue dots to figure out the right swings to study to help figure out where the market's going to go in the future, and that'll make sense as I pull it together. So on my charts, whatever charting software I'm using, should be using MetaTrader more, should be using Metastock, I should say. You're going to see these purple and blue dots on my Metastock charts, right? So the blue dots are your major swings, and the purple dots are your minors. Okay, I use a higher default. I use a 55 period, which I find smooths out the DMI, okay? DMI is your directional movement indicator. I put a 55 on it. If you're in a blue oscillator situation, you're in an uptrend, and if you're in a red oscillator, you're in a downtrend. So on this chart, on this slide, I just introduced 2 key concepts. Number one, what's the trend of the market? We're in a red oscillator situation, so we're in a downtrend. Number two, as I mentioned, the purple and blue dots are going to give you the most significant swings on the charts. You're going to use those to base your Fibonacci around. Okay, so let's start looking at some real price action here. So number one, what's the trend of Google here in the 60-minute? We're in a blue oscillator situation, so you're in an uptrend, right? You've got to find the proper swings to use your Fibonacci tools, right? So you're going to go down, and you're going to find, okay, this is an uptrend. You're going to look for the most recent major swing wave low when the market's uptrending. And the most recent major swing wave low is right there because that's your blue dot. After you find your blue dot, you're going to go up to the very high right there. Okay, and that is going to be the swing that you're going to use. That's the most recent and relevant trend swing around which you'll base your Fibonacci retracements. You can do this in downtrends as well. So we have a red oscillator situation. We're in a downtrend. Any blue dot to blue dot swing in the direction of the trend as defined by the 55 period DMI is a trend swing. So though the overall trend of this market is down, okay, there's 2 separate trend swings that we need to be aware of. Okay, blue dot to blue dot is number 1. That's trend swing 1. And blue dot to blue dot is trend swing 2. And you can see it was interrupted by this correction right here. Okay, so it's a key distinction you have to make. The 2 trend swings compared to the overall trend. You can also use these blue dots, which is these major swing waves, highs and lows, as counter trend moves, right? So the trend of this market, this is Amazon on the 60-minute. We're in an uptrend. So you've got blue dot high to blue dot low, counter trend swing. Blue dot high to blue dot low, counter trend swing. Blue dot high to blue dot low, counter swing. Now, what's interesting is you see there's a blue dot here. This one tried to put it in the low. Market tried to break out, false break, and then came down and set another one. And that's fine. That'll happen. So there's 3 separate corrective swings against the established trend in this market, which is up. Okay? Same thing, Google 60-minute, we're in a downtrend because we got red oscillator, blue dot low to high. Against the trend is going to be a counter trend swing. You're going to use these to help calculate your fib. So guys, we're doing a presentation on fib. I'm 25 minutes in, and I haven't even introduced you to a fib study yet. Do you find that odd? Right? Finally, on step 5 in that Fibonacci trading scroll, we are introduced to our first fib study. But with the tools that I just gave you, it's going to reduce the subjectivity drastically here. So the trend is up in this market because the DMI oscillator is blue. We want to find the most recent and relevant trend swing, which we know we're going to find the most recent blue dot low against this uptrend. So where is it? There it is right there. That's going to be the starting point. And then we're going to simply find the highest price following that blue dot low. This guy's had a chance to turn blue because we must have 13 bars off the top. Okay. If we only have 5 bars, that guy will be purple. Okay, because that's your minor swing. So Fibonacci retracements are the most basic fib tool out there. And one of the most common questions are like, where do I start and stop them? This is a very objective way in order to start doing your fib retracements, right? So you're going to go low up to the very high. Now, a retracement, what it's designed to do is, number one, identify the trend of the market. And it's going to help you figure out how far this pullback might go in order to give you an opportunity to get long, to buy the market, very close to support, and expectation that the trend will resume. Or if you're in a downtrend, how far will the market come back against you, okay, in order to get you in a short position at a very competitive rate with tightly defined risk and expectation that the market's going to drop. So Fibonacci retracements are designed to do just that, figure out how far the correction is going to be. And the way they do that is they apply these Fibonacci ratios, these specific ratios, against the prior trend swing to help figure out where the correction may be. Now, how do you know which one of these ratios will hold? You can't know. And one thing that I want to be very clear on here is I don't think you can trade the markets with just Fibonacci retracements right here. You need to add more. It's a great starting point, and I start there almost every single trade that I do, but you need to add more. All right, so let's look at a real example. This is Amazon on a 60-minute. We're in a blue uptrend. We're in an uptrend, so we're in a blue oscillator, so we're in an uptrend. Find the most recent blue dot low. There it is. Find the highest price. There it is. It's a purple dot, so we don't have 13 bars off the top yet. It'll be soon. So that's your objective starting and stopping point for a retracement. So you bring up a retracement tool, you click the low, you click the high, and those are your different retracements. These are possible stopping points on the way back where you can establish long trades to get in at a very tight competitive price and expectation for the market to move up. Now, the hardest thing is waiting, okay? And that was one thing that took me a good, I don't know, 7-8 years to learn in trading, was patience, because a lot of us are coming in, we love, sorry, I didn't realize Mr. Wonderful's picture is behind me the whole time. Get rid of his face. One of the hardest things was patience, right? Waiting for the market to come to you. So we're all so aggressive, and we think we're wonderful traders like Mr. Wonderful, and we want to trade, but you got to be patient. Okay, so let's just kind of practice some retracements here. Throw some symbols at me, and let's see if we can come up with. Let me see if we can come up with that. And I apologize. Jeff's going to yell at me. I'm not using Meta. This is a brand new trading computer, and I don't have it installed yet. He is going to be so mad at me. I've got to get it installed. This is brand new. Okay, throw some symbols at me here, guys. Huh. These are all weird. Okay, I can't even follow the questions. Okay, here's PayPal. Let's get off of PayPal, 30 minutes. Okay, so for PayPal, oscillator is up. The DMI is up, so we're going to go drawings, retracements. We're going to find the most recent blue dot low right there. Blue dot low up to the very high. Let's find another one here. SPY, yep. Okay. All right, so we are still in an oscillator uptrend right there. So where's the most recent blue dot low? Right there. So we're going to blue dot low up to the very high. And you'll notice this guy's had a chance to turn blue because we've got 13 bars. Now here's the deal. I will never, almost never buy a retracement that's not gone at least to 38%. I will go down. I will not buy less than a 38% or more than 786. This is your buy zone right here, okay? Apple, and let's see where's the most recent blue dot low, right there. Click once, strong retracements, blue dot low up to the high. Okay, so there's the most recent blue dot to blue dot. What's going on with Apple? So we went down to the 50%. We've done a double bottom on 50, and we're coming back to a triple test of 50%. So your buy zone is going to be right there in Apple. Okay, I actually have a Tesla trade. I have a couple trades on right now. What do I have? I've got Apple on right now. I've got emerging markets. I've got Facebook, Tesla. I just took that off. I actually put a long-term Tesla on and short-term. Let's take a look at Facebook. And I'm just showing you guys how to use retracements. Okay, Facebook's no good there. And you can't do it on every single one. Let's change him to a 195, okay. So we're in an uptrend in Facebook. Most recent blue dot low is right there. And you go drawing retracements, blue dot low up to the very high. Okay, so that's how you properly draw a retracement. Okay, now how do you trade with that? It's really hard because you've got to kind of work the zone a bit more than that. Okay, you've got to get some more information. Let's see, what are bonds doing? Yeah, let's look at longer term. Bonds have been rallying back, okay. So the oscillator is, the DMI is deactivated here, but I can tell you we're in a downtrend. Most recent blue dot high is going to be right here. So you're going to go from there down to the low. Drawing retracements. So you're going to go blue dot high down to the absolute low, and look, TLT actually went right to the 38% retracement, then sold off. That's pretty interesting. And you could actually go down from the daily. You can go down to a smaller 60-minute. That's going to be a blue dot on a lower time frame. You can set up a shorter term trade right there. We'll come back at that and look at it, all right? So those are retracements, okay? Now, let's take our fib game to the next level. Fib retracements, guys, what we just did was we looked at trend swings to help figure out how far the ongoing corrective wave might go. Let's step up the game and let's look at prior corrective swings as well and project those to the current corrective swing to figure out how far that guy's going to go. I think studying prior corrective waves, comparing them to your current corrective waves, is more powerful than doing the retracements that I just introduced to you, or probably you guys already know and just reminded you of them. So the fib projections we're looking at are 38, 618, 1, 1272, 16182, 2618. Now, the 100% is very common. So what that means basically is if this was a $3 drop right here in this correction, you'll want to watch the $3 level right here. Okay, that'll be the 100%. And that's called a measured move or a two-step or an AB equals CD. Sometimes it's called a measured move. There's a lot of different names for it. But you'll definitely want to at least watch the 100%. If 100% doesn't hold, watch 1272 or 1618, or sometimes it's shallower at 618. Again, how do you know which one of these ratios is going to hold? You don't. But what you're going to do is start stacking fib studies of multiple price swings to arrive at a zone of support resistance. That's where you start putting on your trades. Okay, so here's the S&P on the 15-minute, and let's just use these projections. So number one, we got to identify the trend. It's down. Okay. Number two, let's find the most recent and relevant corrections. How do you know what are the most recent and relevant corrections? It's going to be the ones with the blue dots. So see if you can take about 10 seconds and see if you can find two corrections that are defined by the blue dots, which are major swing waves, highs, and lows. Okay, so I see a blue dot here to here. There's one. And I see a blue dot here to here. That's two. That's purple to blue. That's no good. That's purple to purple, no good. Purple, blue, no good. So there's two important corrections in this downtrend, which are corrective rallies, that we want to study and project to this current study. Here's where things start getting awesome. If you take the opinion of this corrective swing and this corrective swing, slice it up by your fib ratios, projected off the current swing, that's when you're going to start stacking a zone of support or resistance. So depending on charting software you use, they're called projections, they're called extensions. It can be a little confusing, but it's a 3-click process. So you click once, you click twice, you click a third time off the low. So it's a 3-click process, right? So you want to find the distance of the prior correction and compare it to the ongoing correction. You also, and I'm going to leave these red ratios up, you also want to look at blue dot to blue dot, this correction against the current. And what's cool here is the distance traveled on this guy, whatever that is. I think it was like 10 points in the S&P, 10 or 11. That's the exact distance in the blue ratio, 0 to 100%. That's 11, 12 points. That's going to be 11, 12-point move, 11, 12-point move. Notice it's starting to fortify the zone of resistance that came from this little red correction. So we're going to start building the zone. All right, so let's go back and let's look at some symbols. All right, let me go back. It's so weird. The questions keep going to the bottom. All right. Okay, so let's take a look at some time frames here. Where's my... Let me bring up my other charts here. Let me just get these all on one screen. I have 3 of the 34-inch curve monitors, and it winds up being a pretty bad webinar experience. So I have one like 1920 by 1080 monitor and keep the resolution the same. All right, so let's take a look. Let me see. Throw some symbols up there for you. Let's see what's going on in the gold market. Okay, let me go like this template. Power wave. There we go. Okay. So gold on the 60 minutes in a downtrend. We've got the DMI oscillator is negative. Okay, so let's find the prior swings. Okay, against the established trend. So the trend is down, right? So these blue dots will show up on Metastock, and we're going to find all blue dot to blue dot rallies. Okay, so there's going to be, here's one, blue to blue. Here's one, blue to blue, and then we can also use this one up there. There's another one here. I mean, they're all over the place. So basically what you want to do is you want to study that correction, compare it off the low. Study this correction, compare it off the low. This correction, compare it off the low. All right, so let me just do it. It's kind of clunky in the software. Let's go like that. So we're going to go, okay, let's just do the most recent one. So we're going to study that correction right here. Meta is much better at doing this. And we're going to compare it against this correction. All right, so what you're going to notice is right now, this distance right here, that blue dot to blue dot correction, we're right at a 618 relationship. 100% is going to be right there. I'm also going to do it over here. Okay, let's do it over on this blue dot to blue dot correction right here. Study him and go off the lows. Okay, do you see where that distance right here basically was the exact same? That swing was 12 bucks. This swing was 12 bucks. That's why the 100% are right on top of each other. Do you see that? 100% are right on top of each other. I can almost guarantee you if gold goes to 1273 in the futures, you're going to see some kind of reaction. Okay, that's going to be pretty wild. You watch that Monday or Sunday night, 1273. Let me throw, I'll do one over here. Let me throw one more up. Let's see what's going on in Netflix. And the thing is, guys, you're not going to be able to find it on every single chart. Okay, not every chart is going to be able to be traded. You got to find the best setups. So Netflix is in an uptrend. We've got a deep correction here and a deep correction here. So we're going to go drawings, extensions, blue dot to blue dot, right there. And we're going to click blue dot to blue dot off there. And you're going to start building zones. So for Netflix, there's a 3-level zone right here because it's in tight proximity of one another, right? Let me do one more. What else is moving? Let's see what's going on with Google. After that big gap, probably going to be tough. Yeah, not much to do there. Pretty simple here. If we get a pullback in Google, you want to look at that blue dot to blue dot off the high. You want to watch 909 and 919. Those are going to be 2 key levels on the pullback in Google. Okay? Tim, good question there. How do you get the purple and blue dots? I'm going to have a nice little competitive offer for you at the end. If you purchase, you will get these for free, and they're built from Metastock. Okay? So as we pull this thing together here, guys, you're going to find that the projections that we just looked at, blue dot to blue dot, and then red to red right here, that's going to correspond to the ratios. There's the red projections from this swing. Here are the blue projections, right? The blue dots or blue swings are right there from this projection. And don't forget about the retracements, right? We can also do a retracement from high down to low, and those are going to be the green levels. So basically, you are taking the temperature and the opinion of this swing, and this swing to help arrive at a zone that consists of 1, 2, 3, 4, 5, 6 different fib levels, a 6th level FRZ, to tell you that the S&P futures have resistance from 1252 to 1256, a 4-point zone. That's really, really powerful information. If you're a futures trader and you want to spend all morning or all day scalping, selling every rip up into the zone, that's fine. If you just want to short the SPY, you can sell it and put a tight stop above the zone. If you're an options trader and you want to sell a call credit spread up here, or you want to buy a put debit spread, buy a 2150 put, sell the 2145 put, do a put debit spread, you can do that. If you want to sell 2155, 2160 call credit spread, you can do that. When you have this kind of information to know where resistance is, a zone, it doesn't matter what kind of trader you are, it's extremely valuable information. It takes a little time to put it together, but I don't want you trading, because the biggest enemy to us as retail traders are commissions. And you've got to keep the frequency of trades down. Put yourselves in market moves that are likely to result. If you're trading them based on trends, great. If you're an option trader and you want the market to go sideways and you're selling premium, that's fine, but you got to have a defined area of where that's going to be. So as I mentioned, we're trying to find a zone of fib support and resistance that we can identify ahead of time. If we get that test of that zone that we want, we can very quickly execute a trade with a tight stop. If the trade gets stopped out, that's fine. We've defined the stop, we've defined the entry, we know what our size is, we know how much money is at risk. It's, if you just sit down, you don't know what your trade plan is, and you just start buying, and then you figure out your risk later, like, you're going to get screwed. So the fib that I've just introduced you to quickly, those are multiple studies. We looked at retracements and extensions, but you got to look at projections, retracements, extensions, symmetry. All the different tools come together to help you figure out where the likely turning points are. This is a little fun trade that I did in GDX. I just did this thing live. Did this on YouTube. I do some fun YouTube videos, as you can tell. I'm into video. It's kind of fun. So there's a fib support zone here in GDX into 29, and there's a nice fib resistance up here into 32. For options traders, that's really good, because if you know where the market is likely to hold support or it's likely to hold resistance, you can buy options or sell options here. You can buy or sell options here. You can kind of finance whatever kind of option strategy you want. Those of you who do trade options, I did this live. I did an iron condor. I did kind of a one with positive delta. I did 28, 29 half, 31 half, 32 half iron condor. I took in 78 cents. Did a 20 lot, executed the trade live, boom, filled, sent the trade alert out to customers, and this thing just kind of played through. And this was a fun one. This was over the summer last year. It was a really quiet summer. GDX gold miners had a high volatility, so that's why I did the iron condor. Went from support up into the resistance zone. I'm just like booking trades here. This was funny. I traveled up to the distillery. I'm a co-owner in a craft spirits distillery in upstate New York, and literally I was just about to go to work on the still. Like, I do some of the marketing and stuff. I know a little bit about the makings. My partners do everything, so I'm one of 2 owners. But right before I went to work in the distillery, I just booked profits, put the camera on, threw it up on YouTube, made $1,000 in the trade, all just from fib support and resistance. That's really all it is. So you can trade this stuff, whether you're a short-term trader, options trader, whatever you trade. Here's another one. This is a fun one. The idea was for today's presentation was to set up a way to identify zones of support and resistance to buy trend pullbacks or sell rallies and downtrends. You can counter trend trade with this stuff, and that's when you get a little bit more advanced. And this was a fun trade. This was GMCR. This is a little bit of like here's how cool we are trade, but it's just a fun one. So Green Mountain Coffee had been getting crushed, if you guys remember that. So I came up with a zone of fib support using retracements, extensions, and projections. Earnings came out, and it was right down into the zone of support right before earnings. The earnings were terrible. It gapped up on bad earnings. So I was like, okay, interesting. So I put a pretty aggressive option strategy on it. Those of you who follow options, it's called a bear call ladder. Basically, sell a call credit spread, and with the proceeds of that credit spread, you buy an out-of-the-money call. So I took in a credit of 5 cents, and basically what that means is if the stock goes bankrupt, you make 5 cents. If it goes sideways, you hit max loss, and if it goes up a lot, you'll make money. So the reason it gapped up on bad earnings was the stock was about to get bought out, and our uncovered call, we bought at 85 cents, went to 32 bucks. And I had the trade on. I had all of our research customers in. Like I wrote a video. I did a video about it. I said, guys, here's why we're doing this trade. And like an $85 option purchase went to $3,200. Like I had guys who tripled their accounts overnight. It was pretty awesome. But it was all from a counter trend fib support, which identified a potential buyout on a bad earnings report, and it gapped up. So it was just kind of a fun trade. So the profits that I made in that Green Mountain Coffee trade are what I used to invest in the distillery. So it's kind of fun. So coffee and spirits. I don't know if you guys know, but like craft spirits in the U.S. is booming right now. It's a fun business. Kind of diversify out of the market a little bit. Anyways, so guys, the point of the presentation, I just, we're limited in time. I just gave you a quick little, just a quick little look at fib and how to identify entries ahead of time. I think if you're just chasing these indicators around that are kind of flipping off buy-sell signals at different times, like you don't really know when to go in, when to go out, it's hard to find risk. The only thing that's making these the indicators move is price moving, which means you're inherently reacting to price. I think that puts you in a position of weakness. So again, if we look at Google, the way I'm going to trade this thing, I'm definitely not buying up here. You guys know, okay, how do you draw a retracement? Well, you go to retracements, you look for the most recent blue dot low, which is right there. Click once, you go up to the top. Okay, so my 38% is going to be right there. I'm really not going to be buying less than a 38% pullback. So I'm going to get rid of you and you. I also have a blue dot to blue dot corrective swing here. Blue dot, so you're going to click once, you're going to click twice, and you're going to go off of that top. And then I'll make them different colors to distinguish. And again, the hardest part about this style of trading is waiting. You have to be patient. And when you can stop chasing markets is when you really start getting entries that other people aren't going to have. So for me, my buy zone in Google is right in that zone. There's fib support zone 1, 896 to 884. Stop tightly below that. And then my FSZ number 2, fib support zone number 2 is 872 to 866. I'm going to put an alert in here and say, if that happens right there, people are going to be puking out of this thing and panicking. He's like, oh my God, it's great earnings. Why is the stock going down? People are selling off. They're like, people are freaking out. And if you can wait for the market to come down into that zone with a tightly defined risk, I don't care what you say. That's how you trade. That's it. That's how you trade. For me, this isn't for everybody, but there's no better way to take advantage of people's emotional tendencies in the market by trading that way. Okay, so as I said, we like to anticipate zone support and resistance ahead of time. If we get the trade, great. And if not, if we miss it, that's fine. Just got to have patience, and then we're going to have a clearly defined stop above. And we get stopped out, so what? It happens all the time. Okay, so it's a game plan, right? It's not chasing price, not loose stops or no stops, trading by the seat of your pants. It's a leading indicator. It's a methodology that kind of gets you ahead of the game. Anticipate trade like a market maker, not a market taker. It's enjoyable, it's comfortable, it's a repeatable process. So I love this slide. Tony Robbins, as you guys know, he's the head coach for Paul Tudor Jones, who in my opinion is one of the best living discretionary hedge fund managers in the world. you don't know who he is, check him out. So if you want, guys, as I mentioned, I have a pretty nice little course that's packaged up. It's been out for about a year, and we've had almost 1,000 people take this course, and the feedback has been really, really good. So it's very competitively priced for you guys. If you're interested, if you're a little confused but interested, perfect. It's exactly where I need you to be. So it's called Best Way to Trade Fib. In this course, I'm going to share with you the best way is to strengthen Fib retracement levels using Fib support and resistance zones, which are using the multiple tools to arrive at zones of support and resistance, where you initiate low risk, high reward trades. You can stop guessing and risking valuable capital. And the other part I would add is, stop the frequency of trades. Guys, I used to, before I ran this business, I used to trade on Wall Street, right? I was a hedge fund trader and a senior technical analyst. I could tell you, I used to trade on all the major investment bank platforms, and the commissions we paid on the hedge fund were nothing. Institutional guys pay nothing for commissions. Compared to what we pay now as retail guys, it's tough. One of the biggest, I think, obstacles to our profitability as retail traders is our cost of transaction. You got to get that down, or you got to go with someone who's really, really tight on commissions. So I think we need to decrease our frequency of trades, which can be boring and kind of be tough, but if you could wait for the market to come to you, only take premium setups, it might take a week or two for the trade to set up, but if you save those commission dollars and only put yourselves in quality trade setups, that's going to help you drastically. Last 2 years, I've made money trading, okay? But my commissions, even me, I try to decrease my frequency. My commissions represented over 50% of my trading profits. Like, it's crazy. It's crazy what we pay. So just keep that in mind. All right, so here's what you'll learn in the course. Along with that is how to construct a Fib support and resistance zone, my 3 favorite kind of advanced Fib setups, my favorite time frame to trade, and also help you figure out how to figure out your best time frame based on your risk tolerance. Trading rules, I'll give you the Fib tool settings, checklist, cheat sheets, entries, exits, stops, targets, how to scan the markets, how to filter out the best trades, stop guessing what to do next, and stop getting head faked. So if you want to go to the next level, stop chasing those poor signals, put yourselves in quality setups, I feel this course would be very worthwhile. This is for people who want to anticipate trades rather than react. That's the core theme of the presentation. This is for people who want to find market turning points that others don't see. Like, that's one of the coolest things for me. If I go away for a couple days and I don't look at charts, which is pretty rare, but sometimes like I'll go away and then I'll open my charts a week later, and you'll see price literally fill itself in and just stop at the zone that you picked out $30 ahead of time. And you're like, oh, that would have been awesome to be there and just see it. I mean, we do call turning points that can be very tight, but it's just so cool to just be like, to go away, just let price take care of itself. It'll come right down into support, bounce up, and you're like, boy, that would have been an easy trade. It gets me out of bed in the morning. I've been doing, Fib since 2001, and there's certainly guys who are older than me who have taught me, guys like Larry Pesavento and Bob Miner and Bryce Gilmore. I mean, there's been some really guys who've shared it with me. I'm friends with those guys today. In fact, I interview them on a couple of my courses, and it's been around since the 60s or 70s, and I'm happy to kind of carry it on from there. Okay, it's not the Holy Grail. You won't be on the yacht with the Wolf of Wall Street by March. It's simply an edge over the market. And it's for people who want to keep things kind of straightforward, not more complicated than it needs to be. And it's for people who can make a decision. This is recorded, it's archived, it's ready for you to view immediately. You'll get a username and password into my website, which is Trading Analysis, to view the course. It's over 15 hours of content. Okay, this is when it happened. There was 2 content sessions, and there was live trading. I traded my capital live. So if you're interested, here's how you get a hold of it. Tradinganalysis.com/fibs, F-I-B-S, www.tradinganalysis.com/fibs. You get the 2015 course as a bonus. You get the updated 2016 course. You get the art of the money management, and that's what I learned on the hedge fund, which is account risk and trade management. I got a pretty unique look at how to handle your capital as a professional trader that I'll teach you there in this course. Get the stop trail plan, checklist, and cheat sheet. profit-taking plan, you get the live trading sessions, and you get the swing wave indicator. Those are the blue and purple dots you can download onto Metastock. Okay, so you're talking over $1,000 of material, 15 hours of education and live trading, where I do trade live. I mean, that's the only way to do this business. I trade live in my accounts every single day. All my positions, every single trade alert I put out, I execute, and we took a lot of profits on Friday. We had a really, I had $2,000 of profits heading into Friday. A lot of those positions came off because those options were expiring. So I do trade live, and I do this live in the markets every single day. All right, so guys, $100, and you're good to go. So tradinganalysis.com/fibs. I'll drop that link in there for you, and we'll only do 50 spots because there will be some customer service questions and stuff like that. So we do limit it to 50, and with this size room, it will sell out. I'm going to drop the link in here for you, analysis.com/fibs, and that should work. Let me just drop this in here. Oh, I don't know if I showed you guys. Those are the Rutgers cheerleaders. This guy, Don Peebles, he's a Rutgers alum. He's like Trump level real estate mogul. He was awesome. Jackie, Tim Seymour from Fast Money. Oh, we were the team Flash Crash, right? Because my last name is Gordon, so we're team Flash Crash. Everyone was making fun of us on that one. So here's the checkout link, tradinganalysis.com/fibs, $100, get you done. You'll have access to the website, which right here it is, tradinganalysis.com. And when you purchase, you will go to the members area right here, and they'll give you a link and explanation of all this. And you'll go right here on our educational courses, and this is your course right here, Best Way to Trade Fib. And you'll have access to this course. And as I mentioned, there's the 2016 course. You're talking 150 minutes of content there. You're going to get the 2014, 2015 course. There's the slides, more coaching, cheat sheets, downloads for the indicators, more archives, downloads, live trading. It's all there. Okay, so you'll have lifetime access to that course. 50 spots, tradinganalysis.com/fibs. Just some unsolicited feedback, best explanation, light bulb moment, awesome stuff, really enjoying this, good stuff, really, really nice. Okay, so that's the course. And again, I'm sorry to not answer questions. The questions are doing something really weird. They're like scrolling to the questions from the very beginning. So let me just see if I can undo this thing. Okay, what questions? All right, perfect. Yes, it does, Barry P. Yep. We have it for multiple platforms, but obviously we're focused most on Metastock right now. Have Bigelow 1055. Yeah, it keeps. I'm looking at questions from 1055. It keeps going back. Something's very weird. Okay. Yes. Gasly. Yep. Trump level like bankrupt. Yep. Richard. Yes. Michael. Does it work on Fib? Absolutely. I actually used to be the senior technical analyst for Forex.com, and Gain Capital was our parent company, the hedge fund, and so I really got perfected my Elliott and Fibonacci trading with Forex. So 100% Forex. Do I use cycles? Not really, Howie. I use Fib time, and I'll introduce that to you in the class. Like horizontal, the vertical on the y-axis would do Fib price, and then the horizontal y-axis would do Fib time. So I don't use cycles so much, but I actually do measure the duration of trends and corrections to help figure out how far we go. Thomas D, 100% agreed there. Yep. No. Oh, Jeff, I see Jeff coming in there. How are we doing on time? We're done.
I'm about to play you off. I need to get some like music that.
Jeff,
like,
I can't. Oh, wait. Hold on.
That's right. He unplugged his speakers.
I hear you now.
Okay, good. I was just saying that I need to get some music to play people off, like they do at the Grammys.
Oh, right. I'd like to thank my mom. I'd like to thank my dog walker. I'd like to thank... Sorry, I plugged my speaker.
Good job. Great job today. Thanks for coming. Thanks for spending an hour with us.
Thanks for having me, and have a great rest of the presentation, guys. You got a lot of good content here.
All right. Thanks, Todd.
Thanks.